Good morning. Can you hear me? If you can hear me, drop a comment if you can hear me. How are you doing? Hope your day is going well. And how has been trading? I hope it's been profitable. You're welcome. Good to have you in today's session. If you have any question, if you have any pair you want us to analyze together, please drop it in the comment section. Okay? If there's any pair you want us to analyze together, please drop it in the comment section. Okay. You're welcome, you're welcome, you're welcome. Let's do it again today. Let's do it again today. Let's make some money. Let's make some money. Let's make some peeps. Peeps gotta pay the bills. Peeps got to pay the bills. Okay. Uh, okay, so let's go straight to the charts. So Australian dollar USD is the first pair on our list. If you join the weekly session, I told you guys my bias for Australian dollar USD for the week is bullish. And I think Tuesday, Wednesday, Australian dollar USD was bearish. I was patiently waiting for a bullish pattern on Australian dollar USD. So let's go. Let's see what's happening on the chart. Okay. So let's start with the daily. Let's see how yesterday candle closed. Okay. So let me delete all this. Okay. So at this point we had this high, this resistance. Okay. We had this support which became a resistance. So that was a supply zone, and you can see this candle closed above this supply zone. This tells me there is more demand than supply. There is more demand than supply. Now this pullback we saw here, okay, that occurred, I think that was yesterday, this bearish move that occurred yesterday. Okay, it was to go fill a fair value gap. Okay, that's the reason for this pullback. There was a fair value gap. If you go down to let's go to 4-hour time frame after the formation of this bullish Marubozu. Okay, let's go down to 4-hour. If you go down to 4-hour, you can see there's a fair value gap here on 4-hour. Can you see that? Can you see this fair value gap? You can see. You can see, and that fair value gap has been filled. You can see. And at that gap, when price entered into that gap, you can see the candlestick patterns that formed inside that gap. We had inverted hammer, we had doji. Can you see that? That's a strong indication that the buyers are showing up strong in the market. Okay, so Australian dollar USD is bullish at the moment. Okay, if you are considering buying Australian dollar USD, you should set your stop loss 10-15 pips below this level. Okay, your stop loss should be 10-15 pips below this level if you want to buy Australian dollar USD. My bias on Australian dollar USD is bullish. You could also wait for this resistance to be broken. Okay, after the close of this current 4-hour, by 11 a.m. this candle will close. Okay, if it closes bearish, a new resistance level will be formed. Okay, so you could also wait for that resistance to be broken, okay, before you execute a buy trade. But you could also go in now, set your stop loss several pips, like 10-15 pips below this level. I think this pullback is to fill a fair value gap on lower time frame. So after this bullish move, Let's go down to 1 hour and 15 minutes time frame. Let's go to 1 hour. So you can see on 15 minutes time frame, you can see there was a breakout from this resistance. Can you see this resistance? There was a breakout from this resistance. Can you see this? There was a breakout from this resistance, and after that breakout, a fair value gap was created on 1 hour time frame. So it is likely price will pull back. As you can see, I think this is where price is heading to. So you could patiently wait for price to pull back and fill this gap before you buy. But why wait? Okay, why wait? You could also execute the trade, set your stop loss few pips above this level. For example, if you're trading with, let's say, 0.1 lot size, you can go in with 0.05 lot size, 0.05, and if price keeps pushing down and gets to this zone, you could execute more trades. I hope you get it, because it's probability. It is not guaranteed that price will fill this gap. And if price doesn't fill this gap, if price keeps going up from the current market price, you would lose that opportunity. You will lose that opportunity. So you want to be in the market. You go in with a smaller lot size. Then if the price hits our point of interest, which is this fair value gap, then you go in with more lot size. I hope that is clear. Good morning, Mr. Hamilton. Good to have you in the class. If you have any question, any pair you want us to analyze together, drop it in the comment section. Okay, so let's move to the next. Okay, so let's go. Let's move to the next pair. I hope that is clear on Australian dollar USD. I hope that is clear. You get that on Australian dollar USD, right? I hope you guys can hear me. I hope you get that on Australian dollar USD. Let's move to the next pair. Euro USD should be bullish also. Euro USD is bullish at the moment. Good morning, Mr. Oludu. Okay, so let's start with the daily. So you can see how yesterday candle closed. Can you see how it closed? It closed as an hammer. It closed as an hammer, and it indicates change in trend from bearish to bullish. Not only that it just closed as an hammer, you need to see the reason why it closed as an hammer. You can see at this point we had a support here. Can you see it? There was a support here. So that hammer that formed yesterday is sitting on a previous support level. Can you see that? So after the formation of this hammer, let's go down to 4 hour. If we go to 4 hour and we can find a bullish reversal pattern on 4 hour, that tells us that there is more demand than supply. That tells us that we have interested buyers than sellers. Do you get that? So let's go to 4 hour. So you can see the pattern we have on 4 hour time frame. You can see this is a marubuzu. Can you see this? This is what? This is a marubuzu. Okay, now you would see that this candle, this bullish candle that closed, didn't close above the high of this bearish candle. So it won't be right for us to execute a buy trade after the close of this bullish candle. We would have waited for price to close above this high. Okay, we would have waited for price to close above this high, okay, which is also a previous resistance. Can you see it? It was a previous resistance at this level. Also, you'd also see that this level was a support on the 4 hour time frame, and this bullish candle closed above this support, which has become a resistance. This tells me demand has exceeded supply, and if demand exceeds supply, we look for opportunity to buy. Right now, like I said, we would have waited for a candle to close above the high of this bearish candlestick, and you would see that this next candle closed above this, the high of this candle. This is the confirmation candle. This is the candle that confirmed that we have more buyers in the markets. So it is after the close of this candle, we would have executed a buy trade after the close of this candle, or we wait for price to pull back. Let's see if a fair value gap was created after the close of that Marubozu candle. Let's go to 1 hour time frame. Okay, so you can see a fair value gap was created. Can you see this gap? Can you see this gap? Okay, there was no fair value gap on 4 hour. No fair value gap on 4 hour. Let's go down to on 15 minutes. Let's go down to 15 minutes. Let's go down to 15 minutes. So on 15 minutes, you can see this fair value gap that was created. You can see there was a fair value gap that was created here. Can you see this on 15 minutes? So price is expected to pull back to this fair value gap, right? But you can see that has not played out. That has not played out. Now, since I know that there's a possibility for price to pull back to this zone, should I wait for price to pull back before I execute a buy? Yes, you can wait. You can wait. But I could also go in, right? I could also go ahead and execute the buy trade, but my stop loss must be below this fair value gap. If I decide to buy at the current market price and there's a possibility for price to pull back and fill this gap, then my stop loss will be at this level. So if I'm entering the trade right now, my risk will be high. My risk will be high. But if I wait for price to pull back to this level, my risk will be low. But the question is, what is the certainty that price will pull back to this level? It's not certain. It's all probability. But I want to be in the trade because the daily candlestick pattern has confirmed that the trend is bullish, right? And 4 hour also has confirmed, right? So daily and 4 hour has confirmed that the trend is bullish. So personally, I don't wait. I don't wait. All I need to do is just calculate the risk. If I take a buy from this point, I don't want to risk more than 40 pips. I don't want to risk more than 40 pips on any trade. And if I'm risking 40 pips, I'm aiming for a minimum of 60 pips. Okay, so let me calculate the risk. If I decide to buy from the current market price, which is 1.0848, 1.0848, and my stop loss will be at, this is where my stop loss will be. This is 1.0797. That's about 50 pips. That's about 50 pip risk, 50 pip risk, okay, which is above the risk I'm comfortable with, okay. So I might want to see price pull back a little, let's say 10 pips, okay, or 15 pips. I want to see a drop before I execute a buy trade. But normally I should have executed this trade before it got to this level. I should have executed it before it got to this level. As you can see, there was a shift. There was a shift in market structure here. Can you see this? There was a shift in market structure here. There was a break of structure here. This is shift in market structure. This is break of structure, right? So I would have entered buy around this level. And if I had entered buy at this level, my stop loss would have been at this level, which will be less than 35 pips. It will be less than 40 pips. I hope you are following. If there's any pair you want us to analyze, drop it in the comment section. Okay, Mr. Daniel, good morning. Okay, I hope that is clear on Euro USD. I hope that is clear on Euro USD. So Euro USD is bullish at the moment. Euro USD is bullish at the moment. The only thing that would make Euro USD sell would be fundamentals, but technically Euro USD is bullish. I think we are expecting a major news will be released later today, I think by 2:30. If the major news favor the dollar, then we could see Euro USD go bearish. Okay, it is only fundamental that will give Euro USD strength. That's if the news favors dollar. But technically, Euro USD is bullish, and I think it's going to hunt for stop losses at this previous high. That should be your target if you are buying Euro USD. This previous high, that's where liquidity resides. That should be your target if you are buying Euro USD. Okay. Mr. Odogu, I can't explain shift in market structure yet. Please, you could do a Google search. Just go on YouTube and search for shift in market structure, please. After the class, just do a search. After watching the video on YouTube, if you don't understand, then you should participate in the Zoom session, which we hold tomorrow. I will attend to your questions during the Zoom session. Okay? Just do a Google search just do a YouTube search on shifts in market structure. There are a lot of videos on that, okay? If there's anything you don't understand, I will attend to it during the Zoom session. Okay? Thank you. Let's move to the next pair. Uh, Mr. Jeremiah says we should look at Euro Aussie. Okay, let's look at Euro Aussie. Euro Aussie. Euro Aussie, you can see I have a trade on Euro Aussie. I have a trade on Euro Aussie. I sold Euro Aussie yesterday, and you can see it went in my direction. I made some good profits on Euro Aussie, but right now, as you can see, it is bullish. You can see it is bullish at the moment. Now, why is it bullish? Okay, why is it bullish? Because if you look at what we had here yesterday, this is the reason I executed the trade. After the close of this shooting star, you can see before the formation of this bearish shooting star, we had a spinning top, right? We had a spinning top, and the next candle closed as a shooting star. That tells me that sellers or the bears are showing up strong in the market. So I took a sell trade. Okay, now why is price bullish? Let's go down to, let me start with the daily. Okay, so this is daily. Daily close strongly bullish. Okay, so let's go down to, now what I think is playing out in the markets is this. I think they want to hunt for stop losses at this high. I think they want to hunt for the stop losses at this high because they know a lot of retail traders would have executed sell trade. So there's a lot of liquidity residing at this high of this candle, the high of this candle. Okay, so let's go down to 4 hour. Okay, so let's go down to 1 hour. So you would see on 1 hour, we had a fair value gap here on 1 hour. Can you see this? We had a fair value gap here. So it could be that they want to fill this gap. They've already filled it. Price is trading above that fair value gap. Okay. Now let's go down to 15 minutes. Let's go down to 15 minutes. Okay, so on 15 minutes, you could also see on 15 minutes, there's a fair value gap here on 15 minutes. Let's work with this. Can you see this fair value gap on 15 minutes? So I think it's likely they're going to fill this gap before. I will not advise that you buy Euro Aussie. Don't buy. You cannot buy Euro Aussie at the current market price. You cannot buy. You should look for a sell setup. So the price is currently inside this gap. Okay. So wait for a bearish reversal pattern to form on Euro Aussie, then you sell. I will not advise you buy. If you had wanted to buy, you should have entered buy after the close of this bullish candle. This is where you ought to have entered buy, right? Okay, don't buy Euro Aussie. I don't support buying Euro Aussie. This is where you ought to have bought Euro Aussie, and your stop loss would have been at this level. By now, you would have made some good profits, right? You would have made some good profits. So entering a buy now is at a very high risk. Is at a very high risk. How do you make profits consistently in the market? You ensure that your risk is very small. As a trader, you need to learn to minimize your risk. You cannot be executing buy now. If you enter buy now, your stop loss will be at this level. You can see the risk. Do you get that? You can't enter buy now on Euro or C. When you open your chart, the question you should ask yourself is, where is price heading to? And where did it start moving from? Where is it coming from? Where is price coming from? And where is it heading to? Now, when you open the chart, you know where you ought to have entered buy on a trade or sell on a trade. If price has passed that level, if the market has gone far from that level, let's say 30, 40 pips from the price you're supposed to have entered that trade, don't execute the trade. Like this trade now, this is where you ought to have entered by 6641, 1.6641. Now the market is trading at around 6685. That is about 40 something pips. You shouldn't be taking such trade because price has gone far from the level that you ought to have entered that trade. Don't jump in because of FOMO, fear of missing out. No, wait for price to pull back. If you insist that your bias on Euro Aussie is bullish, you still need to wait for price to pull back, maybe to this level before you buy. I hope you get that. You should wait for price to pull back. If you insist that your bias is bullish on Euro Aussie, wait for price to pull back before you execute a buy trade. You cannot buy at the current market price. I hope you're getting me. I hope you're getting me. I'm not making things too complex, right? Hope you're getting me. So Euro Aussie is bearish. Let's see the pattern that will form around this zone. Okay, let's see the pattern that will form inside this zone. That is when consider okay, that's when you consider buying sorry, selling. Let's see the pattern that will form in the next 1 hour or next 15 minutes. I hope you're with me. Okay, so that's my take on Euro Australian dollar. Is that clear, Mr. Jeremiah? Is that clear? Okay, let's move to the next pair. Okay, USD card. So what do we have on USD card? Let's start with the daily time frame. Always know the trend on the daily. So you can see yesterday candle, okay, it broke a resistance. And I think this move yesterday was to clear liquidity above at this previous high. I think that was the reason for this bullish move. The bullish move that started on Monday was to clear liquidity at this previous high, and I think they've achieved that yesterday. So after the close of yesterday candle, what pattern do we have on 4 hour? Let's go to 4 hour. What pattern do we have? Okay, you would also notice that we had a resistance here. Can you see this? So price tested this resistance. You can see we had a resistance here. Can you see that resistance? This is the resistance. So price tested that resistance and there was a rejection from that resistance level. So how do we know if that resistance level is going to hold? Okay, how would we know that the resistance level is going to hold? The candlestick pattern that forms at that zone will determine if that resistance level would hold. So let's go down to 4 hour and see the pattern we have on 4 hour. So you can see the pattern we had on 4 hour. This is a shooting star. So there's a high probability that this resistance is going to hold. Okay, there's a high probability that this resistance will hold because the pattern that formed at that level is a bearish reversal pattern, shooting star. Okay, now at the moment a support has been formed, right? You can see a support was formed at this point. So if you're selling, my bias on USD card is sell. So I would consider selling USD card if this support is broken. Okay, I want to see a candle close below this support before I would sell. If a candle does not close below that support, I would not sell USD card. And I have no plans to buy USD card. It is sell. So I'm waiting for a candle to close below this support. Okay. So now, why is price pulling back? It could be that there's a fair value gap that was created after the formation of this shooting star. Okay. It is likely a fair value gap was created after the formation of that shooting star. So let's go down to 1 hour, 15 minutes, 5 minutes to identify a fair value gap. Okay, let's go to 1 hour. Do we have a fair value gap on 1 hour? Okay, no fair value gap. Okay, I would also like to identify the low of this bullish candle. Okay, you see what I did? I identified the low of this bullish candle that formed before this bearish candle. The fact that this bearish candle closed below the low of this bullish candle. Now we can see this as an engulfing pattern. See these two candles as one candle, right? If you see these two candles as one candle, that will be an engulfing pattern. So what we had here is an engulfing pattern, bearish engulfing pattern, which indicates change in trend from bullish to bearish. I hope you're following. Okay, So this indicates change in trend. So let's go down to, there's no fair value gap on 1 hour. Let's go to 15 minutes. So can you see on 15 minutes, we have a fair value gap here. Can you see this? Can you see this? And also we had an engulfing pattern here on 15 minutes. Can you see this? Can you see this? I believe you can see it. I believe you can see it. So we had, you can see, this was an engulfing pattern. Okay, this was an engulfing pattern. This would have been the best time to execute a sell trade on USD CAD. After the close of this engulfing candle, this would have been the best time to execute a sell trade. Now, if you had missed this opportunity, this is another opportunity. Wait for price to fill the fair value gap. And price is currently, okay, you can see where price is now. You can see. So it's likely price will fill this gap. So the pattern that forms at this level will determine if we are going to sell. We don't have to wait for price to get to this level before we sell. If a bearish reversal pattern forms at this level, inside this gap, we would consider selling. We don't wait for this support to be broken before we sell. So if we are selling below this at this level, our stop loss will be at this level. Because we know that if a candle breaks out from this high, then we should expect more bullish move on USD CAD. And since my bias is sell, I would have to exit the trade in loss. I would have to take that loss. Are you with me? So if a bearish reversal pattern forms here, you can sell USD CAD, set your stop loss, let's say 10 pips above the high of this candle. Okay? Set your stop loss 10 pips above the high of this candle. Why do I always advise that you set your stop loss 10 pips above the high of the candle? As you know, liquidity is residing at this previous high. Liquidity is residing at this previous high, and the institutions might want to go for that liquidity. They might want to hunt for that for those stop losses at this level. So it's safer you set your stop loss 10 pips above the high of the candle. Yes, it is possible they would push price to hit your stop loss, but it is best to set your stop loss above the high of this candle. Okay? It will be very easy for them to clear liquidity at this level. But when you set your stop loss 10, 15 pips above that level, they will find it difficult. Even though they can hit it, it will be difficult for them to hit it. Okay? But it's very easy for them to clear stop losses at this level. I hope that is clear. If there's any pair you want us to analyze, just drop it in the comment section. We've looked at Australian dollar USD. If Euro Australian dollar USD is bearish, we should expect a bullish move on Australian dollar USD because both pairs are they are negatively correlated. Both pairs are negatively correlated. So you can see the pattern that is forming on USD. You can see we already have this is an hanging man. This is an hanging man. If this candlestick closes bearish, one can go in. If this candlestick closes bearish below the low of this hanging man, one can enter the trade. Okay, one can enter the trade. Okay, you could also go to, let's say 1 minute. Let's see what we have on 1 minute. Okay, so this is 1 minute. So you could just wait for price to break the low of this candle. If you want to sell, wait for price to close below the low. I think shift of market structure will occur at this level. So you could wait for shift of market structure to occur before you execute the sell trade. I hope that is clear. Okay, I hope that is clear. Wait for shift of market structure to occur on 5 minutes or 1 minute time frame before you jump in and sell. Okay, so break of structure will be at this level. Shift of market structure will be at this level. So you could wait for price to break this level. That will be a strong confirmation. Okay, that will be a strong confirmation. So Australian dollar USD is bullish. Okay, we've looked at, okay, gold. Let's look at gold. Gold is bullish. I am bullish on gold. Let's see the daily. Let's start with the daily time frame. So gold is bullish. My bias on gold is bullish. We had a support here. Let me identify the support level. This is the support level. We also had a support here. Okay, this is a support. Now, if you look at what happened, was it on Monday? Was it on Monday? Okay, so you would see this candle on gold. We had a resistance here. This was a resistance. Okay, you can see this was a resistance. If you go back, it was a support. Can you see that? This is support. Okay, you can see that. That was a support on gold. You can see it here. This was a support, right? Can you see it? If you go back also, you can see it was a support here also. If you go back also, you can see we had a support here. Can you see that support? Price tested that support and there was a strong rejection from that level. Can you see this support? I believe you can see this support. Can you see that? So that's a demand zone. So price hits that demand zone and there was a strong rejection from that demand zone. So right now, gold is bullish. Gold is what? Is bullish. You cannot sell gold with the pattern we have on the chart now. You cannot sell. If you want to sell gold, then you should wait for price to break this support. If price breaks this support, if a candle closes below this support, there's a high probability that gold will drop to this next support. So based on price action, current price action, gold is what? Is bullish. And it is likely going to go for liquidity at this high. You can see this previous high. That is my expectation on gold. It is likely going to hit this level. I'm currently buying gold. I have a trade on gold. I think I've made close to 60, 70 pips on gold. I executed the trade yesterday and it's still very active. Let's see what we have on 4 hour. So you can see on 4 hour, price just tested a resistance and there's a rejection from that level. Okay, there's a rejection from that level. So if the next candle closes bearish and it closes below the low of this an angry man has formed on 4 hour, which indicates a change in trend, right? But we need to wait for price to break this low, the low of this angry man. If you are considering selling, wait for price to break the low. Okay, wait for price to break below the low of this angry man before you sell. I hope that is clear. Okay, so my bias on gold this week is bullish. My bias on gold this week is bullish. Okay, I've analyzed Australian dollar. Australian dollar is bullish. I will look at it again, just a few minutes. Okay, let's look at Australian dollar USD is bullish. Australian dollar USD is bullish. Okay, there's a fair value gap here on Australian dollar. If you go to lower time frame, okay, there's a fair value gap here. So I think this pullback is to fill this fair value gap. Okay, you can find that fair value gap, I think, on 15 minutes. Okay, let's go to 15 minutes so that I'll show you the fair value gap. Let's go to 15 minutes. So you can see the fair value gap on, can you see it? Can you see the fair value gap on 15 minutes? This is the fair value gap. Price pulled back and it has, you can see it has touched that fair value gap, you can see, and there's a rejection from that level. So there's a probability that Australian dollar USD is likely going to go bullish from this point. Okay, but you want to wait for the bullish candle to close. Then you could go down to maybe 5 minutes or 1 minute. Ensure there's a shift in market structure. So if you look at what we have on 5 minutes, this is an engulfing pattern, right? This is an engulfing pattern on Australian dollar USD 5 minutes time frame. Let's go to 1 minute. Let's go to 1 minute. So on 1 minute, there should be a shift in market structure before you buy. Okay, wait for shift in market structure, maybe at this point. Okay, wait for price to break that level or wait for price to break this high. Okay, I think this level is a key level. Okay, if a candle closes above this high, okay, you might want to consider buying, because if you go back here, you will see this level was a support which became a resistance. So it's a key level. So if this level is broken, then you could consider buying. Okay, the bias on Australian dollar USD today and for the week is bullish. I hope that is clear. I hope that is clear. Is there another pair you want us to analyze? That will be all for today's session. Unless you have questions or you have other instruments you want us to look at, let me know. Drop it in the comment section. If you have any question, any instrument you want us to analyze, let me know. I'll take one or two. Okay, one or two. Then we end this session. Mr. Daniel, Mr. David, Mr. Eze, Mr. Jeremiah, if you have any instruments you want us to analyze, please let me know. Okay, let's look at one of the JPY pairs. Okay, let's look at USD JPY. I'm bearish on those pairs. My bias on those pairs on JPY pair is bearish. Okay, let's start with the daily. So you can see price tested this resistance. You can see price tested this resistance, and there's a strong rejection from that level. If this support is broken, as you can see, this is a ranging market, right? This is a ranging market. If this support is broken, then we should expect more bearish move. Okay, if today's candle closes below that support, we should expect more bearish move on USD JPY, and this could be the next target. Okay, if that target is broken, if that level is broken, we could see USD JPY drop to this level. That's my take. You only consider buying USD JPY if the resistance is broken. If the resistance is broken, we should expect more bullish move on USD JPY if the resistance is broken. I hope that is clear. I hope that is clear. For a sell, no, my bias is buy on gold. My bias is buy on gold. Okay, I'm not selling gold. Okay, I'm not selling gold. My bias is buy. This is bullish. You cannot sell gold at the current market price. You cannot. Like I said, if you go to lower time frame, if you are considering selling, as you can see, this is an hanging man. Okay, if the current 4-hour candle closes below the low of this hanging man, you might want to consider selling gold. Okay, but I am following the weekly trend. My bias for the week is bullish. Okay, but if you're considering selling, wait for a candle to close below the low of this hanging man before you sell, because as you can see, we had a resistance here. So there's a high probability that this resistance is likely going to hold because a bearish reversal pattern has formed at that level. I hope that is clear. I hope that is clear, Mr. Alodu. Okay, let's look at the last instrument will be GBP-USD. GBP-USD. Okay, let's look at GBP-USD. I think I've analyzed GBP-USD. GBP-USD, my bias on GBP-USD is still bullish. You can see I have a trade on GBP-USD. This is my stop loss on GBP-USD. I executed a buy at this point, and this is my stop loss. So I want to see, I'm expecting GBP-USD to clear liquidity at this previous high. That's my take on GBP-USD. I think this pullback is aiming for a fair value gap. Let's go down to 1 hour. Do we have a fair value gap here on 1 hour? As you can see on 1 hour, there's a shift in market structure. Can you see this? There's a shift in market structure. There was a break of structure at this point. This is a break of structure. This is a shift in market structure. This is a break of structure, shift in market structure. And we have, this is called, what was this called? Trying to remember. No, it's not breaker. This is not breaker. Mitigation block. This is a mitigation block. You can see this is a mitigation block. This block is a mitigation block. This is a mitigation block. You can see this is a mitigation block. Okay, so it's likely price will just go into that mitigation and go up. So there's a shift in market structure, break of structure after the close of this candle. So that's the reason I'm considering buying, and also considering the weekly pattern and the daily pattern. Both part those the pattern on both time frames is bullish. Okay, that's why I'm bullish on GBP USD. I hope that is clear. So that will be all for today's session. I really appreciate you all for your participation in, yeah, trading psychology is very key. You need to work on your trading psychology. Okay, and I would recommend you go on YouTube and listen to podcasts. Okay, interviews by professional traders. Okay, learn from them how they manage their psychology. Okay, I think the best way to manage your emotions of greed and fear is to have a trading plan, and have a trading plan that you stick with. Okay, trade your plan. That's one way to manage your emotions of greed and fear. Okay, if you say you're going to exit a trade at this point, you exit. If you say you're going to take profit at this point, you take profit at that point. Okay, you have to religiously execute your trading plan. That's one way I know you can manage your emotions of fear and greed. Okay, if you have a good strategy and you can't manage your emotions of fear and greed, you still keep losing money in the market. You still be losing money in the market. Psychology is very key, very key. Okay, so GBP Australian dollar. If Euro Aussie is bearish, then GBP Australian dollar also should be bearish. But let me just look at it. I don't think I have it. Okay, I have it on my list. Okay, so you can see fair value gap here was created on 1 hour time frame. Okay, fair value gap was created on 1 hour time frame. You can see the pattern we have on GBP Aussie is similar to what we have on Euro Aussie. So a fair value gap was created, price has pulled back into that fair value gap. So there's a high probability that price will drop. Wait for a bearish reversal pattern to form inside this gap, then you should sell. That's my take. You cannot buy now. If you want to buy, you should wait for price to pull back also. If you want to buy, wait for price to pull back. You cannot buy at the current market price. The risk will be too high. Okay, wait for price to pull back. If you insist you want to buy GBP Aussie, there should be a pullback before you buy. This won't be a good price to buy GBP Aussie. Okay, but my bias for the week on GBP Australian dollar is bearish. Okay, so that will be all. I appreciate you all. I appreciate Mr. Jeremiah, Mr. David, Mr. Lodu. Who else again? Mr. Daniel, Mr. Eze. I appreciate you all for your participation. Okay, so that will be all for this week. We'll be meeting next week, Tuesday, Wednesday, and Thursday by 10 a.m. I wish you all a profitable trading day. Enjoy the rest of the day.